Can I really find the next 100 bagger by following Peter Lynch's research-first strategy, even if it means turning down $20 million? Peter Lynch is a name synonymous with investment success. As the legendary manager of the Fidelity Magellan Fund, he achieved an astonishing 30% annual return over a 13-year period, turning $10,000 into over $250,000. His track record is a testament to the power of disciplined investing, and one decision in particular showcases his commitment to research over instant wealth. Lynch faced a dilemma that would test the resolve of even the most seasoned investors. He had the opportunity to make a massive, immediate payout, but it meant abandoning his rigorous research process. On the other hand, sticking to his guns would require patience and conviction, but could lead to long-term benefits. This choice wasn't just about making money, it was about staying true to his investment philosophy. For Lynch, the allure of quick profits was never more enticing than the satisfaction of uncovering a well-researched investment. His dedication to understanding the businesses he invested in was paramount. Every potential investment had to pass his strict criteria, ensuring that he only put his money into what he truly understood. At the heart of Lynch's strategy was his philosophy of investing in what you know and scuttlebutt research. He believed that the best investment ideas came from a deep understanding of a business's operations, management, and industry trends. This approach wasn't just about doing homework, it was about developing a genuine insight that could give him an edge over the market. Lynch would often talk to competitors, suppliers, and customers to get a 360-degree view of a company's potential. His scuttlebutt research was legendary, allowing him to make informed decisions based on more than just financial statements. By focusing on what he knew and could understand, Lynch minimized the risk of investing in unknowns. This strategy wasn't just about avoiding losses, it was about systematically increasing his chances of success. One notable period where Lynch prioritized research over a multi-million-dollar opportunity was during his analysis of a company that would eventually become a huge success. Despite the temptation of a quick profit, Lynch decided to dig deeper, speaking to industry insiders and scrutinizing the company's financials. His thorough research uncovered red flags that weren't immediately apparent, allowing him to make a more informed decision. This instance illustrates the depth of his conviction in the long-term payoff of this strategy. Lynch's patience and diligence ultimately led to a better outcome, not just for him, but for his investors as well. His commitment to research wasn't just about being right, it was about being thorough. By choosing research over rapid riches, Peter Lynch's dedication ultimately led to sustained success and a strategy beyond mere luck. His legacy continues to inspire investors to prioritize knowledge and understanding over quick gains. As we reflect on Lynch's approach, it's clear that his strategy, though not easy to follow, offers a timeless lesson in the importance of thorough research. What do you think about long-term investing versus quick gains? Share your thoughts in the comments below. If you're interested in more insights into legendary investors and their strategies, be sure to subscribe and hit the notification bell for more content.